Assalamualaikum warahmatullahi ta'ala wabarakatuh, and a very good afternoon to all of you out there. Welcome back to my channel. Today we're going to discuss question from the common test. The one tested in October 2019 is question 1 on PPE, and this is question 1C. So we have ACE Engineering, that is a growing engineering company. It has an accounting period which ends 30th September each year. So if it ends 30th September, it will have a beginning of 1st of October each year. Among the assets owned by the company are land, machinery, office building, 2 factory building, and these assets were bought on 1st of October. These are true for machinery. These are for land, actually, for building, and also for the office building. However, the machinery was bought on 1st of April. So that are the information on the date of acquisition. Okay, we go to the next page. We have more details here. The land is located in Kelantan and all the other locations for the respective asset. Land is not depreciated. You need to take note on that, and also be reminded that earlier the date of acquisition here is 1st of October 2009, whereas for the machinery, the date of acquisition is on 1st of April 2013. Okay, for the item building and office building, they are depreciated using straight line method with a remaining useful life of 50 years, no residual value, but is using monthly basis. So for monthly basis, that means that we are going to provide depreciation based on the proportion or the month of ownership in the year, both in year of acquisition as well as in the year of disposal. So it will be provided according to the month of ownership in the year of acquisition and in the year of disposal. For the machinery, it has a reducing balance method, and the remaining useful life was 8 years. And just take note, the date of acquisition was 1st of April. So starting from 1st of April, it has a year remaining useful life of 8 years. So the estimated useful life was 8 years, no residual value, but it's adopting yearly basis. So for yearly basis, it means that there is going to be a full year depreciation in the year of acquisition. However, there will be no depreciation for the disposed asset in the year of disposal. I hope that is clear, because this is from your previous FAR subject. Next, let's look at what are given here regarding this transaction that happened to this company. Okay, these are the information that are available for you to take note and also to do some accounting treatment. Okay, number one is information on the land. So I use different pen to differentiate. So it's about the land, and the land has a fair value on different date, 30th September and 30th of September 2014 and 30th of September 2019. So this one is your initial revaluation, whereas this one is your subsequent revaluation. So that has to be treated accordingly. And this one is actually about revaluation, the first one here, number one. Okay, and you have the fair value for the respective date, and you need to check whether there is a surplus or a deficit for each revaluation, and treat them accordingly according to the paragraph 39, paragraph 40 and 41 of MFRS 116. The next one, number 2. So we're done with the overview of number 1. We'll now look at number 2. You have at the end of the year 2018. So if it's year 2018, the end of the year means 30th of September 2018. There's a massive flood in Segamat. So that massive flood has affected the production of the factory. So that flood, which is a natural disaster. And because of that, the company conducted an impairment test. So that was an indicator that the asset was impaired. So company took initiative of conducting impairment tests. When was the date? It was on 1st of April 2019. So meaning that this one is on impairment, item number 2. So this is a combination of several series of transactions that happened to this company. Okay, that impairment tests that were conducted on 1st of April revealed that the fair value less cost to sell was 8 million and the value in use, VIU, value in use, is 8.55 million. So the fair value less cost to sell was 8 million. FVCTS. So this one is what you call the information on recoverable amount. So you need to go and compare which of these two is higher, as the recoverable amount will take the higher between the two amounts. So that one happened also in the current year, which is on 1st of April 2019. Okay, our current year actually starts on 1st of October 18 up till 30th of September 19. Okay, then you have another revaluation. Another revaluation that you have in number 3. Okay, revaluation in number 1 is for non-depreciable asset, because land is not an asset that is subject to be depreciated. But this one is the revaluation for factory building, and this is for depreciable PPE, your asset. And you are informed that at the beginning of the year, 1st of October, the fair value is 20.5 million. Right? Don't get confused with the fair value here. This one is for building. So you need to compare the fair value with the carrying amount on 1st of October 2018. And this is just an initial revaluation for the factory building. And then we go to number 4. Number 4 is about a company that decided to relocate the building. So at first, this office building were being used as admin building, and now they relocate the building, and after that, somewhere on 30th of September, which is at the end of the year, the office building were being sold. So the word sold means this has something to do with derecognition. So this is the derecognition or disposal of office building. Derecognition here, you need to go and check what are the carrying amount as on 30th of September, And since the office building is depreciated using straight line method and monthly basis, you will still provide depreciation for the office building for that year only on 30th of September that you dispose. So on that 30th of September, we want to see what are the impact to our counting treatment as well as our ultimate objective, which is to prepare the notes or schedule on movement of PPE. Okay, let me remind you that this question is on the preparation of notes to the PPE. Okay, that was information number 1, 2, 3, and 4. The first one is revaluation for non-depreciable assets. Second one is impairment. Third one is revaluation for depreciable PPE. The fourth is derecognition. I hope you have made yourself clear with that. I will proceed with the following one, which is number 5. If you look at number 5, so if you look at number 5, I take your time to read that part first. The company incurs an annual service cost. For the machinery. You know, machinery need to be maintained years from the year it was acquired and every year. So therefore you need to incur some service cost. And the service cost that was incurred is 5.8 million. However, by doing this service or doing this maintenance, it will not improve any parts of the machine. It will just, maintain its existing condition, or just try to make sure that it is in its working order. So therefore, for this annual service cost, this is something that you need to expense off in the SOPL. Why? Because it does not improve the future economic benefits beyond its existing capacity. And that happened in the same year, which is the current year. And then on 30th of September, there was one broken component of the machine. So out of this one whole machine, one of the component or maybe one of the parts was broken, and it is being replaced with a new one. So all part were broken, and then now it is replaced with a new one. So the new component costs you 108. So 108 is the new component that will be added to the existing machine. And if you add this new component to the existing machine, the cost of 108,000, after that replacement, right? Replacement of component, the useful life or the expected useful life, remaining useful life of the machine will be revised to 5 years. So if you will go through later, you will notice that there will be some increase in the remaining useful life. So increase in the remaining useful life is one of the features that you relate to what you call enhancing future economic benefits beyond its existing component. That is one of them, and there are 3 more. Another 3 is that it can increase the quality of the service of the product, if you can still recall. Yeah, this one is the one here. The third one is that it can also improve the capacity. Capacity means before this, maybe you produce using the same machine 100,000 unit per day. Maybe after the replacement, you can produce 120,000. So more units are produced from the machine. And the third one, sometimes you do not improve in terms of quality, in terms of quantity, or in terms of the life expected to be used, but it reduced the cost significantly. So those are the characteristics that you should look to decide whether or not it enhances the future economic benefits. The last part is just an information, right? But the information in number 5 is about capital and revenue expenditure. So for this machine, the replacement, it will be capitalized in the soft P, meaning that it will be added to the existing machine. So why? Because it enhances the future economic benefits through the extension in the remaining useful life. The last information, that one is telling you that the company adopt revaluation model. So for the asset PPE, company use revaluation model. It means that if there is any changes in the market value, fair value of the asset, it will be reflected in the account. And you are also have this information that the company has a policy that it will transfer some of the surplus to the retained profit. So this one has something to do with the concept of revaluation surplus realized. So the concept of revaluation surplus realized were discussed in the textbook. It was also discussed in the notes, yeah, somewhere in your slides, so you can go and check it. Yeah, the meaning of revaluation surplus realized means normally upon derecognition, whatever balances in the revaluation reserve, it will be transferred back. Yeah, it will be transferred back to the retained earnings. So revaluation surplus realized. So we'll be doing that in the requirement later. So let's look at the requirement. Number 1, you are asked to prepare the journal entry to record revaluation of land. So remember, item that was related to land is item number 1. So this is for number information number 1. Prepare the journal. Which year? In the 30th year ending 30th September, which is in the current year. So this is to prepare on your subsequent revaluation. You have to be extra careful with that and follow the requirement of the MFRS. And then you have the second one asking you to calculate the impairment loss. And this is for information number 2. Right? Information number 2. And the impairment loss is the one that happened on 1st of April. Let's look at the next requirement. There are a few other requirements. This question is quite lengthy for marks given there, but it's worth doing because it covers a lot of areas in the accounting for PPE. You're also asked to prepare the journal entries to record the transaction related to the factory building. Remember, the transaction related to factory building is in number 3. So you're asked to do all the journal entry for number 3, and that one will involve you to do some kind of workings first before you can do the journal. And that is also related to information number 6. Information number 6 regarding the choice of the company to transfer some of the surplus to retained profits, right? When the property or plant is being used by the company. So I will show you in a short while for that part. Next is number 4. Number 4, you are asked to discuss the accounting treatment for the annual service cost. Remember, I told you service cost is just to maintain the performance. So you need to go and discuss what to do with the service cost. It's being expensed off, because of the it does not enhance the future economic benefits. So you need to explain that. And what is also the accounting treatment for the replacement cost. So the replacement cost of 108 thousand, that one has to be capitalized, right? Because it improves the useful life. So mention that improvement of useful life, remaining useful life, is one of the indicator that the future economic benefits are enhanced. So that one relates to information number 5. This one relates to number 3 and 6. The next one is to construct a note. This is the part that you have to go and prepare the schedule showing the movement. Movement means the movement in the cost, the movement in the accumulated depreciation account before you can actually arrive at the carrying amount. And you are just asked to do for land, factory, building B, and office building. You're not asked to do for factory building A and the machinery, so don't have to do that. And that one will give you 4 marks doing that. So let's look at how do we work out for that. I'll be using my S note to show you the detail on how to work out those information into meaningful workings. And we'll start by doing the first information. We'll follow the order of information given. So I'm doing number 1. So if I have informed you much earlier, the information in number 1 is regarding what? Revaluation of non-depreciable PPE. And this is on revaluation for land. And that revaluation were happening twice, right? So if you look at the information given, the fair value, okay, we'll put the information in a meaningful way. So we are given the information for fair value on 30th of September. So on 30th of September 2014, and we are also given the information on fair value on 30th of September 2019. So I put here the fair value. So the fair value is 7.1 million 30th of September 2014, and another one is 8.2. So in the concept of revaluation, you need to compare fair value with the carrying amount. So you need to find what are the carrying amount here. Since the asset is not being depreciated, the carrying amount will be the cost that is on 1st of October 2009. So on that date, if you can recall, the carrying amount, or the cost actually, was 8 million. So you will compare this, and this will give you some initial revaluation deficit. Why deficit? Because the carrying amount are greater than fair value, and that deficit is 0.9 million. You don't have to take your calculator, you can just simply, use your head. Okay, the next one, that was initial revaluation. The next one, you are informed 30th of September it was having a fair value of 8.2. And what you need to understand is that the fair value last year, or the fair value previously actually, previous value will be the most recent one, which is on 30th of September 2014. No revaluation after that until 30th of September. So the carrying amount will just take that 7.1 million. And that is on 30th of September 19. You compare that again, and this will give you the subsequent revaluation. And this is a surplus. How much? It's 1.1 million. Okay, since we have done the working, why not we look at the requirement 1. So for requirement 1, it asks you to prepare the journal entry for the revaluation of land on 30th of September. But I'll give you some bonus answer here. I will also prepare the revaluation, the journal entry for the one at 30th of September. Just to show you why, so that you can understand better. So you will debit SOPL. Why do you debit SOPL? Because this is the first time that you revalue and you incur a deficit. So you will go and debit, and it is being expensed of how much? 0.9 million the first time, which is initial revaluation. So this will be credited to the land account, 0.9 million. So meaning that in the revaluations reserve, there are no balance because we debit directly to the SOPL. This is what required by the requirement number 1, this one. So you need to look at the requirement of the paragraph in MFRS 116, where it says, should you have a surplus on revaluation, subsequently you will just straight away look at what are the balance that may be available in the revaluation reserve. But here, since it is having a deficit, so that surplus you are going to debit land, of course. It will be 1.1 million. Before you directly credit ARR for the asset revaluation reserve pertaining to the land, you must first offset the balance or the deficit that were incurred in the previous year. So therefore, you will credit this to the SOPL. When you credit to the SOPL, it was under other income. I put there OI. And you can only offset to the maximum of 0.9 million. So meaning to say that if you have 1.1 million, 0.9 million shouldn't be credited to the ARR, but it must be credited to the other income in the year 2019 under your statement of profit or loss. And the remaining, which is 0.2 million, will only be credited to the ARR. So we are done with requirement number 1. Okay. So we are done with that. Number 1. Let's look at information number 2. Information number 2 is on, I've mentioned to you earlier, is on the impairment loss that you're asked to calculate it, right? To calculate, so impairment testing, impairment tests. So you want to see whether there is an impairment loss. So this one is impairment loss for factory building A. I put here FBA. And that happened somewhere in the year ending 30th of September 2019. Okay. So you have the information saying that the impairment test was done on 1st of April. But even though it was done on impairment test on 1st of April 2019, it is within 1st of October 18 up till 30th of September 19, which is the current year. So this is the impairment test that we're going to work out. So first find out what are the costs. The cost, of course, on the date of acquisition. So the cost was 15 million. And then you need to find out what are the accumulated depreciation as at 1st of October 2018. Okay, the date that the asset was acquired is on 1st of October 09 actually. I apologize for the error there. Alright, so you will calculate the accumulated depreciation starting from 1st of October 19 up till 1st of October 18. And please take note that the factory building is having a monthly basis, so you will provide depreciation based on month of ownership, right? Okay, so it would be accumulated depreciation not until 1st of October, but it should be until 1st of April 19. Why 1st of April 19 is the date that you have your impairment test. So if you do that, you would see that from 1st of October 09 up till 1st of October 18, this is 9 years. If you extend a little bit until 1st of April 19, which is the date of impairment, right? This is another 6 months, which is half year. So therefore you need to find what are the accumulated depreciation for 9.5 years. So it would be 15 million, no residual value, so I divide with 50 years, right? Because the expected useful life was 50 years. And then I times 9.5 years. And therefore you get 2.85 million. With that, your carrying amount on the impairment date, 1st of April 19, would be 12.15 million. You will compare your impairment with the recoverable amount, and you are going to look at what are the higher between the two amounts. So you will looking at the higher of fair value less cost to sell and the value in use. However, let's say fair value less cost to sell is not given, they just give you the value in use, you straight away take the value in use. And that's also the same case if value in use is not given, but they just give you the fair value less cost to sell, you take the fair value less cost to sell. However, in this question, you will notice that both are given, so you'll take the higher between the two. So where was I just now? Okay, your fair value less cost to sell was 8 million. Your value in used was 8.55 million. So this one is higher, right? So we'll take 8.55 million. And if you compare, the carrying amount is more than recoverable amount. Because of that, you will have the impairment loss. And your impairment loss on 1st of April 19 would be 3.6 million. So that's going to give you the 3 marks as per requirement number 2. Okay. We now move on to look at the requirement number 3, which is to prepare the journal entry for the factory building. So to prepare the journal entry for the factory building, that means that you need to work out the information related to the factory building B. So if information on factory building B is in number 3. So this one is another revaluation, but this one is revaluation of depreciable PPE. Okay, the question asks you to do journal, so I will work out the workings for you and then we'll do the journal. That revaluation happen only is in initial revaluation. I put here initial revaluation, and that happened on 1st of October 2018, and again it is using straight line method, and the basis is monthly. Expected useful life is 50 years. So those are information that you should take note. We'll work out. So first, cost on 1st of October, the date of acquisition, 2009. It was 18 million. Go and check the table given. Next, I need some space to show the journal next. Okay, 18 million. And then find the accumulated depreciation. Accumulated depreciation here is from 1st of October 09 up till 1st of October 18. And that was for 9 years. So to do that, we'll take 18 million. We divide by expected useful life, 50 years. And we'll multiply with 9 years, which is from the date you acquired until the date of revaluation. That will give you 3.24 million. So the carrying amount on 1st of October 2018, the carrying amount, it would be 14. You take your calculator, please. 14.76. If you compare with the fair value given on that date, 1st of October 18, that was 20.5 million. 20.5 million given in the question. Therefore, there is a surplus. So this is initial revaluation surplus, 5.74 million. That happened, the revaluation happened on this date, right? So it means that the fair value given is at the beginning of the year. So if you talk about the current year depreciation for that year, which is for 30th of September 2019, 30th of September 2019, the depreciation will be charged based on this new value, the fair value. So we will calculate the current year depreciation here. This is a preparation to prepare the movement, right? So I just calculate here. So it will be 20.5 million, and it will be divided with the remaining useful life. Remember, our estimated useful life was 50 years, and we have used up the asset for 9 years. So divided by 41 actually, and you'll get 0.5 million. Okay. And then for each of this, you can do your journal entry, right? So I'm doing the journal entry here, side by side, as the requirement asks you to do it for 2019. So I start off with this one, which I will number as number 1, and then I will proceed with the surplus number 2, and then I will concentrate on number 3, and then I will show you the third one is depreciation, and number 4 is the concept of revaluation surplus realized. Let's do what you're familiar first. So the journal entry, 1st of October 18. So you will debit. I'm using shortcut or just abbreviation, accumulated depreciation. How much? 3.24 million, because you need to eliminate, right? So you credit factory building B. Factory building B also 3.24 million. The next one is on the same date, you revalue, right? You revalue. So you revalue at the beginning of the year, beginning of the current year. So it was having a surplus, debit factory building B, credit factory building revaluation, reserve, or the ARR, and that one would be 5.74 million. 5.74. $5.74 million. Next, that was number 1, number 2. You can see this, yeah, and then number 3, which happens to be on somewhere happened at the end of the year. This is for current year depreciation. So you will debit depreciation for factory building B. You will credit accumulated depreciation factory building B. How much? 0.5 million or 500. Now we will look at the revaluation surplus realized. So revaluation surplus realized is where you are going to look at how much will you need to transfer back to the retained profit. And according to MFRS 116, when the asset is being revalued and it is still being used up, right, you must transfer that back to the retained profit. The revaluation reserve must be debited and credited to the retained profit. In the exam, this is normally done when the question require. So in this question, it specifically requires that. If the question does not require you to do so, you can just skip this part. But I'm doing this because of the requirement. So I'm going to show you the revaluation surplus realized. We go to the next page. Revaluation surplus realized. What you will do is to get the figure, you will take the fair value divided by the fair value, yeah. Sorry, you will take the surplus. Sorry, I made a mistake just now. So you take the surplus. So this is only happening if there is a surplus. It won't happen if there is a deficit, because the word says revaluation surplus realized and divided by the remaining useful life. So the surplus was 5.74. You can do this if the company adopts red line method. So if it's adopting increasing balance method, you cannot do this. RUL now is 41. Remember, 41 is 50 minus 9. So you'll get 0.14 million, and this will be number 4. And we will put this journal entry here, number 4. This is number 3. So I will put here debit revaluation asset revaluation reserve factory building B, which is this one. This one, yeah. And you are going to credit it to the retained earnings, retained profit. How much? What you calculate just now was 140,000, right? So 0.14 million, 0.14 million. So you are done with the requirement in part 3. So we will stop this video. I consider this as part 1, and we will continue with the requirement 4 and 5 in our next video. So I will see you, and I will see you, and I will see you in the next video. Assalamualaikum warahmatullahi